Your take on these numbers, what stood out to you?
I think for the manufacturing side, actually it's not that bad. It's 50.1. We have been in expansionary territory for over 18 months. So I think that's actually the longest expansionary in history. But we still expect it could continue to decelerate. So in our view, for the coming months, it could fluctuate around 50. So that means we have the chance to drop to.
But it won't contract, you don't think?
Yeah. I don't think it's like a contracting trend, but it's just a fluctuation.
47.5 on non-manufacturing. Stop smiling. I know. Yeah. No, I'm kidding. But that's quite a number, though.
Yeah, it's very surprising. I think that we expect it's a deceleration, but for this level, for this kind of the pace, I think it's really surprising. I think it's mainly because of the mini lockdowns since the late July and also in August. So I think that's actually damping the consumption sentiments as well as many service sectors. So currently, including this kind of hotel, flights, entertainment, I think for the service sector as a whole, in our view, it's only at the 80% of the 2019 level. So it's much slower than expected.
Do numbers like this, do you think it still delays the recovery in China, or is it there potential there to actually derail it at this point? How do you see it right now?
We already revised down the GDP forecast. I guess the market already revised down.
Yep.
But given this number, I'm afraid there's maybe another round of the revised down. Because for the second half, we already see the headwinds from the exports slowing down, and also we say for the consumption side, actually recovery is slower than expected. Now it's much slower than expected. For the now, our hope is on the investment side. So hopefully we can say the infrastructure investments to pick up if we can say for the local government bond issuance can be pick up.
I was going to ask you to put everything together for us because while these forecasts are being downgraded in China, they still have growth targets. And Xi Jinping was telling local government officials, I think last week, that they will need to do everything pretty much to meet those targets. Do you think they can meet those targets amidst the other thing they're trying to do, cooling the housing market, for example?
For the Chinese government targets this year, it's very low, it's 6%. So although we said the revised down, it's a revised down from 8.5% to 8.2%.
Okay.
So I think
there's a buffer.
Yeah. Huge buffer. I think we still expect will be above 8%. Around 8%. So currently our forecast is still 8.2%.
But I guess the drag, because you mentioned things like fixed asset investment and local governments financing some of these projects, how does that dovetail into cooling of the housing sector, which makes up a very big part, of course, of final demand?
Currently, for the housing investment, actually it's slowing down, but still actually it's still at a two-digit growth. So it's still one of the support for the investment. And so, but that part we still expect to continue deceleration, but should be at a mild pace. In our view, we don't think the housing tightening policy will be easy, but will not be further tightening. I guess now will remain the status quo. So for the second half, I think the key for the growth is probably really come from the infrastructure investment. Okay. So currently for the local government bond issuance, for the first half, it's only 30% of the total quotas. So until July, it's only used 40% of total quotas. It's much slower than the previous years. So hopefully we can pick up for the coming months. August, I don't think it's a big pickup. So hopefully for the September to December, so that will be the key for the growth for the second half.
You've been writing a lot about, not just about the curves, but also common prosperity, this theme we're hearing from the president more now. Do you think that this is the same as wealth distribution? What does that mean for the consumption upgrade, and what does that mean for markets moving forward?
For the for the common prosperity, I think it's more for the distribution. So it's 3 rounds of distribution. So I think that for this distribution, it's more tilted to probably for the try to achieve to some extent more equality for the social harmony. So I think for this part, and we can say for the China, for the mass consumption, will actually pick up for the coming 5 to 10 years. Because currently, if we assume for China's GDP growth will double by 2035, so that means 4.7 implicit CAGR growth. So, and also for China's GDP per capita will reach probably doubled by 2035. So we will have 400 million of the middle class. So that will be support for the mass consumption. So for the consumption side, we're still quite positive, despite the recent slowdown.
On the equity side, the investment advice is consumer durables and services. That's one. And on fixed income, you're still defensive on bonds.
Yes, I think that especially given the recent this kind of difficulties for some developers, I think make us more cautious about this kind of the property bonds. So we are more a defensive side.